Good afternoon, students. I hope you had a great weekend. I thought I'd spend just a couple minutes talking about Module 2 and then move on to Modules 3, 4, and 5. So in Module 2, you covered Chapter 2, which introduced you to the double entry accounting system. And in Chapter 3, you learned about adjusting entries. You finished Chapter 3 with the adjusted trial balance. And then from the adjusted trial balance, you prepared financial statements. You prepared the income statement, the balance sheet, and the statement of retained earnings. So now in modules 3, 4, and 5, we're going to cover Chapter 4, which is the final step in the accounting process, and it is called the closing entries. Closing process, or the closing entries is what we're going to cover. So what I'm going to do is I'm going to add 3 different handouts that cover the closing process, and I'm going to do a video on Chapter 4 that covers the closing process. All of that will be in Module 3, so hopefully that will help you with the exercises in the Modules 3, 4, and 5. Module 3, 4, and 5 all cover Chapter 4, as I said, but we break it down into 3 modules just to make it a little easier for you to understand what's happening. The closing process is where we update the statement of retained earnings. So if you'll notice on a balance sheet, you'll see retained earnings. Well, those retained earnings stay at a certain amount, whatever amount is on the balance sheet, until the end of the accounting period, at which time we will update that retained earnings balance for the revenue, expenses, and dividends that have occurred during the year. And we do this through a closing process. There are 4 entries required in the closing process. 1, we close revenues, and we use a temporary account called income summary to do that. We close expenses, we close dividends, and then we close the temporary account income summary. And when we're finished, this retained earnings balance will be updated for the activity of the period. When we are closing accounts, we are closing what we consider temporary accounts. And temporary accounts are accounts that are really part of equity. And so they are revenue, expenses, and dividends. And so all of those will be closed to 0 to start the new accounting period. The closing entries will update the statement of retained earnings, and we will then look at the adjusted trial balance, and the adjustments will be made such that the temporary accounts will all be 0, and the real accounts, which are your assets, liability, and equity, will be the only remaining accounts. To verify this, we'll create what we call a post-closing trial balance, and this will have, once again, the real accounts. So the information I'm going to upload will cover all of this in great detail and hopefully be helpful as you go through Chapter 4.